I'm down for whatever tonight. I don't need the final things of life. No matter where I go, it's a good time. Yeah. And I don't need to sit in VIP. Middle of the floor, that's where I'll be. Don't got a lot, but that's enough for me. Yeah. 'Cause I'm good, yeah, I'm feeling alright. Baby, I'ma have the best freaking night of my life. And wherever it takes me, I'm down for the ride. Baby, don't you know I'm good, yeah, I'm feeling alright. Don't you know I'm good, yeah, I'm feeling alright. So I just let it go, let it go. Oh, na 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 na, no, I don't care no more, care no more. Oh, na 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 na, so come on, let me know, let me know. Put your hands up, na na na, no, baby, nothing's gonna stop us tonight. 'Cause I'm good, yeah, I'm feeling alright. Baby, I'ma have the best freaking night of my life. And wherever it takes me, I'm down for the ride. Baby, don't you know I'm good, yeah, I'm feeling alright.
All right, good evening, everybody. Hope everyone's doing well on this beautiful Wednesday evening. You're joining here tonight. We're going to go through some capital investment opportunities with Fortune Homes, and super excited about sharing with you guys what we have here. And at any time, please feel free to chime in with some questions by typing in the chat. Or if we have a smaller crowd, we can definitely unmute our mics and ask it in real time as well, so we can hear everyone's voice and hopefully see what everyone looks like on camera as well. All right, so let's go ahead and get started with tonight's presentation and webinar. All right, so each one of you guys are personally invited to this webinar because you had expressed at some point in time some interest in investing capital into real estate deals. And we have a lot of different facets that we do inside real estate, and capital investing is one of them. So we'll give you a background of what and how this program works under our umbrella, okay? All right. So first of all, who are we? All right. Fortune Homes Team is a national network of real estate professionals, and we've been doing that since 2014. All right. Personally, we've been investing in real estate since 2011, but we created a network nationally starting in 2014. All right. And then we also own and operate an educational division of real estate investors called RE Street Smart. And we've trained to date over 1,000 students since 2015. And these students have gone on to do many, many great deals, similar to what we have accomplished as well. And they've moved on to other locations as people migrate to different locations based on family needs or relocation needs. They apply what we have taught them into their marketplaces as well to expand there in those divisions under the umbrella of Fortune Homes. All right. Fortune Homes also owns and operates at Fortune Homes Construction, which is a residential construction company servicing the entire DMV area. Originally, we were focused on investors, people who do fix and flip and buy and hold, and it was specialized for their needs based on what they were looking to do to sell houses at top dollar or rent them at top dollar. But we recently, this past year, opened it up to homeowners as well, who are doing major renovations such as kitchen and bath remodels and things of that sort. Okay. And also, Fortune Homes owns and operates Fortune Homes Capital, which is the capital investment firm that's been servicing nationwide since 2017. And in fact, tonight's presentation is going to be focused on this right here. But the reason why I mentioned the previous three is because each of them build on each other for each company to interact with each other for it to fulfill its need. Okay. So Fortune Homes Capital, basically we help people grow their existing capital as it is right now and increase their wealth. But why, if you have capital, why should you look into real estate? Okay, why do we like real estate personally? And let me tell you why. All right. First of all, our population here in the United States, if not the entire world, continues to increase through birth and through immigration. All right. So over the past 100 years or so, you see there's no downward spiral at all for our population. So as our population increases, more housing will be needed, and that will always be in demand. Okay. Throughout history, since the beginning of time, humans have always needed shelter, some kind of, something over their heads, such as the caveman days or so forth. But each generation that goes on, the standard of living continues to increase and improve for every generation. So human beings at one time, we used to live in huts, and then we eventually lived in log cabins, and then colonial ranches with their stables in the back where the horses are. And then in the mid 20th century, started having brick ramblers and Cape Cods and things like that. And then later on, built out to other houses that are a little bit bigger, a little more luxurious, and have more space. Okay. Personally, I grew up with a family of seven. I'm one of five kids, and we were accustomed in my generation growing up at sharing one bathroom between seven family members. Okay. But in this generation, for all the new homeowners, for some reason that doesn't fly anymore. The parents and owners of the house need to have their own separate bathroom from the kids. Okay. So every generation, there's an increase in improved standard of living. And that's why there's a lot of homes in good locations where there's good jobs and good entertainment and good recreation, but they're outdated because they were built 50, 60, 70, 100 years ago, and they need to be updated to today's standards. Okay. And of course, we have multi-unit and multifamily as well. And of course, in real estate investing, we have controlled income growth. Okay. And the key word is the word control. Okay. So when you have your investments in any kind of vehicle, you want to have control of its growth based on the numbers you're looking at, how the investor or the person who's developing that piece of real estate actually handles that real estate to improve its value and improves its cash flow. Okay. All right. So, control. All right. There's a big difference between investing in stocks and investing in real estate. All right. So, most people are accustomed to investing in stocks. All right. And, average people learn this through a number of places. Okay. So, if they go out and go to college, have some kind of unique finance class, I'm sure they're going to talk about bear markets and, and different things like that. And then when they go into a job, now their HR department talks about a 401k, which generally invests in mutual funds or stocks. Or if they go into a financial advisor at a bank, then they're going to show them about different mutual funds and stocks to invest in as well. Okay, so people tend to learn these from their employer, from their retirement, planners, from financial advisors that work for banks. All right, and where do they usually trade stocks? They usually do it on E-Trade, Ameritrade, or maybe through their brokerage at their local bank that they have a relationship with. All right, and then what can an average person control when they actually buy the stock? Well, the only thing you can control is when to buy and what price to buy. But you can't control its performance because you don't control the company unless you're a majority shareholder, all right? Or maybe even on the board of directors. So because of this, stocks tend to be a little bit more risky because of that lack of control. However, all right. And I'm gonna give you an example. Amazon is a very, credible company. It's been around for a little bit and done, things worldwide, headed up by Jeff Bezos. But regardless you invest in the stock or not, you never know if it's gonna go up or go down. All right. Who would have predicted Amazon would have gone up because of COVID and the pandemic when everything was locked down? Right. No one could have predicted that. But because of certain changes, then the people can take advantage and what could get what I call lucky along the way. They're in the right place at the right time, but how much financial genius did it involve to take a look at the metrics of the actual company to choose whether it's a worthy investment or not? Okay, so you take a look here. Real estate investors, what we can control is that you can control an acquisition cost. So if there's a piece of property, whether it's a single family home or a multi-family building, you control the cost of the purchase based on your criteria. So if the number is not right, we just simply walk away. All right. And we wanted a certain number to meet certain criteria. Otherwise, it is not it is not within the margins of error that we will want to be comfortable investing in with our investors. Okay. Of course, and the value add plan. What kind of value will you add to that particular thing? So if it's a regular single family home, are you going to add a bathroom? Are you going to add a bedroom? Are you going to add a finished basement or square footage? What are you going to do to that? If it's a multifamily building, what are you going to do to that to increase the cash flow? All right, to improve its operational costs and reduce waste and expenses. Okay, and what kind of exit strategy? All right, real estate investors have several exit strategies. They can sell it, they can refinance it, they can do a number of things. Okay, and then when you take a look at the different types of investment vehicles out there, we mentioned stocks earlier. Okay, what kind of investments would banks loan money to you for you to purchase as an investment? Do you think if you go to a bank right now, let's say Wells Fargo or Bank of America, say, hey, I want a $50,000 loan because I'm going to invest in something. And they're going to say, what? And they'll say, I'm going to buy stocks in Amazon. All right. And do you think they're going to approve a $50,000 loan for you to buy stocks in Amazon? Probably not. If you get that approval, let me know. So that way I find out what you did, because to date, I have not found any bank willing to loan against buying stocks. All right. However, banks will loan money to real estate all day long. There's specific underwriting criteria that must be met before they loan. And the reason why they loan there is because they know it is a safe investment for their money to be parked in that investment. That's why they don't invest in stocks, because there's too much speculation. Whereas in real estate, there's more control in the value add and the value of the actual investment, what you do to it, compared to the uncontrolled possible growth or shrinkage of the actual stock value. So that's why they don't loan against any particular stock or mutual fund. Now, banks will sell stocks and mutual funds all day long, and they will get a commission, but they'll never loan money to buy what they're selling, which is amazing and counterintuitive, okay, like an oxymoron. All right. So here's what we have here. We're currently looking for qualified capital investors. All right. And there's a couple of reasons why. Okay. We want to help new capital investors like myself. I came from corporate America. I used to work as an engineer for NASA, for Department of Defense. I did all those great things. All right. And the thing is that most of the time when I work in the company, I park my money either in my savings account or in the 401k or some kind of mutual fund when I was working on a job before. And I was never satisfied with the returns, because back then, when I was investing money into, let's say, a certificate deposit, the return was 1%, maybe 2% at best, depending on how long it was. All right. So the small interest that people are earning in savings account, money markets, or CDs, if you're dissatisfied with those returns right now, then this right here fits your needs. All right. Or maybe you're tired of seeing the fluctuations of the stock market. I mean, when I used to work in a job and I did invest in stocks before, because I didn't know any other type of investment vehicle, I would constantly look at the value of the stock on a daily basis. And I look and say, okay, it went up $1, it went down $1. So my net worth increased by this much, or my net worth increased by this much. But at the end of the day, all I did was look. I couldn't really control the value of the stock because I couldn't control the company and what kind of decisions was made to expand its presence and market cap. Okay, so I couldn't do anything about it. All I could do was look and pray and then hope that I can buy low and sell high. And that's all I could do. All right. Or maybe you have access to capital right now. And when I say access, this doesn't have to be cash per se. It could be access to capital from a number of things, which we'll go through later on. But maybe you don't know where or how to invest that. Okay. And then you want to earn a fixed return with opportunities of profit sharing in secured investment vehicles managed by experts, specifically in real estate. So those are the types of people that we want to help here in this venture. And then, of course, there's a reason why we're doing it, because everyone, we want to be as transparent as possible, because we're obviously doing this for opportunity as well. It's a win-win situation for the capital investor and a win-win situation for the developer as well. So why we're doing this is because when we raise money, more money, I should say, into our fund, then it allows us to increase our volume of deals. All right. In addition to that, we mentioned earlier that we train over 1,000 students who do what we do. They also need access to capital to do fix and flip and their investments as well. So this allows us to support a growing base of students across the country that we're currently training, following our system that's worked over the past 12 to 13 years. It also allows us to support a growing network of experienced investors. So Fortune Homes team is a national network, and to date, we have roughly 3,000 to 4,000 members in our network all across the country. And that's just on meetup.com, but we have other groups as well on Facebook and LinkedIn and so forth that also do what we do as well, which also are people looking for capital to do deals. It also gives us an opportunity to help folks like you have a higher return, who are dissatisfied with current returns that you have right now, or maybe just tired of the fluctuations and you just want to park your money somewhere, not look anymore, and maybe look down the road 6 months to a year and it's like, wait, wow, I've increased my wealth by X%. All right. And all you did was invest in the right vehicle, and then you went off to live your life and you come back wealthier. All right. So that's the whole goal, is to help you grow your wealth while you're still living your life without the stresses of looking at the value on a daily basis, like the stock market. Okay. So how does this work? All right. First of all, we have someone like you who's a capital investor. Let's say you have some funding available that you want to park somewhere in real estate to earn a decent return. And how it works is very simple. You take that funding, and Fortune Homes Capital, once they have an opportunity, they're going to underwrite the deal. They're going to review the actual investor to make sure they're experienced and they know what they're doing. They have a good past performance. We don't loan to people who we don't invest our capital in people who are newbies. All right, they have to have some kind of experience, some kind of mentorship under our umbrella before we do that. Otherwise, they'll probably have to either use their own capital or get a loan against another person or against another lender. But we want them to get some experience first or work under the umbrella of someone who already has experience, so that way it mitigates the risk. We also review the deal, all right? The deal itself, do the numbers work? Does the value add plan, is it feasible? All right, is the time frame about right? And do the comps or the marketplace support what they're trying to sell it for, rent it for, or refinance it for? Okay, and from that information, we'll either approve or deny that investment. Okay, and then once we approve it, then it goes to a property. It could be a single family fix and flip, which we call single family rehab. It could be a land development deal, or maybe a condo conversion where we buy one house or one row house in DC and we convert it to 4, 5, 6, 7, 8 units. All right, that's called a condo conversion. Or we can invest in an existing multifamily apartment that already has tenants in place, that's underperforming because the owner of the property is not appropriately investing its capital to improve the rents and improve the property value and reduce waste and expenses to improve the value of the property. Okay, so once Fortune Homes Capital identifies one of these opportunities, all right, and then you agree to invest your money into one of those opportunities, then we go ahead and deploy the money and then let it perform. And then over the period of so many months to a year to 2 years, depending on what you're investing in, then you will get a return on your investment. And you notice that when you invested money, you only have one stack of money, and then coming back, hopefully you have more than one stack. Okay, so the return on investment should always be your equity, your original principal, plus the additional return on investment itself. Okay, so that's how it works from a visual standpoint. So what kind of products do we offer that you guys can invest in? So everyone have seen on HGTV what fix and flip is. Okay, so the first category is very simple. You buy a single family house, you buy a townhouse, you buy a condo, you renovate it, you remove all the outdated stuff, redo the kitchen, change all the outlets, heavy up the panel, install a new HVAC. All right, and that generally takes 6 to 12 months. And then you're in and out quickly. You buy it, you fix it, you sell it, money comes back, and then plus the return on investment. Okay, and then the land development / condo conversion. This is where land that can be built on. Okay, so maybe it's open land where it's zoned appropriately to allows us to subdivide and allows us to construct new homes with a good infrastructure. So we had to do a site plan, and this generally takes 12 to 24 months and has a decent return as well. All right, and then for those who are looking for buy and hold via multifamily apartment buildings, these investments generally last 3 to 5 years because these types of investments, you need time for tenants to move out from when their lease ends, so that way you can fix up their units and then bring in a new tenant with higher rents afterwards. Okay, so it takes a 3 to 6 5 year process before most of the units get renovated to have increased rents, and then along the way you're doing other things as well to increase the cash flow. You're thinking about installing vending machines, maybe laundry facilities, or maybe looking at some of the expenses that are being incurred right now and what you can cut because it's wasteful. All right, and so if you improve the actual cash flow and what we call the net operating income of a multifamily building, let's say it's 100 units, then that right there will improve its value by so many percent. All right, and that will increase your equity based on the money that you invest in there. Okay, now the great thing about multifamily is that this type of investments allow for quarterly payments back to you as interest. All right, but it's and the reason why we can do that is because there's rents right now for those units that allow us to pay those interest payments. Okay, but that's only a partial interest payment that you're getting once every 3 months. Once the deal is done, then you get everything else in return as an equity growth for that given year once it's either refinanced or sold to another owner once the value add is done. Okay, so those are 3 different products. We call it product A for fix and flip, product B for land development, and product C for multifamily. Okay, so going on to the next slide here. This slide is for illustration purposes only, and these are not nowhere, the exact numbers that you'll be getting because the exact numbers depend on the actual investment itself, on what we predict and project that will be returns for that investor. Okay, so but suffice to say, illustrating wise, the higher your subscription amount, the higher your fixed rate. So you will get a fixed return APR between 5 and 7%. So you invest, let's say $50,000, you'll probably get on the lower end of 5%. And you invest $500,000, you'll get on the higher end of 7%. When I say fixed rate, this means it's fixed, guaranteed, regardless if the deal goes south or not. Now, we haven't had a deal to go south, but if it goes south, you still get the 7%. Okay, it's fixed APR, guaranteed return in that fund. Now, that's the solid orange bar chart based on fixed APR. Now, profit sharing has to do with how the deal actually performs. All right. So how much profit was attained at the end of the fix and flip? How much profit was attained at the end of the land development? How much profit was attained when you sell the multi-family unit, okay, at the end of 3 to 5 years, okay? So whatever that is, all right, that can go, I mean, we've had deals that go up upwards of 20% in total, okay? So you have 5 to 7% fixed APR, and the profit sharing goes on top of that, okay? And in each investment that we advertise out for those who are interested, we will give you a projection based on what kind of a profit sharing we project it to be based on the current available data. Now, of course, nothing's ever guaranteed, but those are projections that we, based on our best guess at that time, will be the returns based on what we see in the marketplace to date. Okay, so that's how our investment products works. Again, these are just illustrative purposes only, and each investment is different in its own performance and profit sharing. Okay, now how can you invest? All right, now Bill Gates once famously said, never undervalue your assets. People are worth more than they think, because a lot of people only think that, well, I'm only worth about, whatever cash I have in the bank or the value I have in my 401k or whatnot, but you're worth more than you think, okay? Know and understand where you have potential cash resources, whether it be liquid cash in the bank or maybe a home equity line of credit, all right? Or a home equity loan. If you only have one mortgage in your property already, it's appreciated over so many years. I mean, if you bought your house, more than 5 years ago, most likely your house is worth a lot more than what it is when you first bought it. So equity has increased where you can tap into that. And then, of course, cash life insurance. Okay, what kind of cash value do you have that you can tap into your life insurance policy that you can use to invest? And then for those who are, who have an IRA, you can actually move that IRA money into a self-directed IRA where you self-direct the investment into a firm like us for investing in real estate. Okay, so the returns that we provide can go directly back into the self-directed IRA. So the returns are tax deferred. You don't pay taxes on that at all. So you have bigger bang for your buck. And now you have more capital in your self-directed IRA to be able to invest into the next deal before you pay taxes. Okay, so you allow yourself to snowball more and defer taxes over and over and over again until you're ready to retire. And then you start slowly pulling your distributions out to live for retirement. Okay, and by that time, of course, you probably want to have your income low to reduce your tax liability from all the nest egg you've created already up to that point. All right, so go on to the next slide. Okay, here are a couple of examples. Okay, so that's how everything worked. I want to share you guys some success stories and examples on how things have worked. In this particular deal was a single family rehab. Okay, so the capital investor invested $245,000 into this property. All right, they received an earned fixed interest rate of 6.5%, and the deal was in and out in 7 months. Okay, so from the 7 months of hold time, 6.5% of $245,000 is roughly $9,300. Okay, so that's what they got for the fixed return. But they also earned a profit sharing from the performance of the fund in the actual deal. And the deal itself was able to share a profit of $16,000. So you add those numbers together, was roughly $25,000, $300 over a period of 7 months, investing the full $245,000. That's an effective APR of 17.7%, which is so much better than a certificate deposit at 1% or 2%, okay? And it was secured by the real estate at the end of the day. And now this person is $25,000 richer, and they can use that money to reinvest it again, in addition to the $245,000 that now snowballs into a bigger number, deal after deal after deal, okay? So that's one example there for a fix and flip. And then we have another one here who was actually a little bit more creative. Now, the first one used their own cash or self-directed IRA in their account, but this particular person decided to be more creative here. I want to share how this person did it. They invested $80,000 in this particular deal in DC from their home equity line of credit. All right, that's what HELOC stands for, home equity line of credit. And from the $80,000, here's what happened. All right, he was paying 4% APR on the actual loan itself. So 4% of $80,000, okay? And then he was earning a 5% fixed rate over 6 months. So just from the fixed rate alone, he's already making a profit. So over 6 months, he earned $2,000. 5% of $80,000 is $2,000, all right? But then he earned a profit sharing as well from the performance of the deal. And he earned an extra $7,500 in profit sharing. So you put the numbers together, combine the $2,000 and the $7,500, the total return on investment was $9,500. All right. Now, the cost of his HELOC was $1,600 at 4% over 6 months. So you do the math. All right. So you take, $9,500 minus $1,600 that he paid to his HELOC. He had a total return of $7,900 and an effective return of 19.8% APR from his $80,000. But in reality, because he didn't use any of his money, he only used his home equity line of credit, his return on investment is technically infinite because he didn't use any of his money. In this case here, I call it printing money out of thin air, but you're doing it legally, okay? So you're using other people's money to invest in a deal that you're earning higher return on, but then you're paying the cost of the money is lower than your returns, so therefore you earn the difference of $7,900. But again, if the $80,000 was his cash, the return would have been almost 20%. But since he used a HELOC, his real return on investment is actually infinite because he didn't have any money, personal money in the actual deal itself. Okay, he used the bank's money to be able to do that. All right, so there's an idea of creativity. Okay. All right, so what sets us apart from other real estate investment firms and how do we mitigate risks? Okay, so Fortune Home Teams, we have a network of a lot of people. So on the bottom, you'll see here on this chart here that this is what other people do. What other lenders do or other firms do, they fund real estate acquisition and then they fund what we call the value add cost financing. Okay, but that's all they do. They underwrite it and then they deploy the money and then they keep their fingers crossed that the developer or the borrower knows what the heck they're doing. All right. So to me, that's considered really high risk because we don't want to foreclose on properties. We want the developer to succeed so that way we get the money back and then redeploy it without any legal headache. Okay. So what they do, other people do, is the quality process and training and mentorships and things like that. They're all independent and there's no control over that whatsoever. Under our Fortune Homes umbrella, because we have a large network of people in our group, we cover the whole spectrum. So not only do we provide funding for the real estate acquisition, we provide funding for the value add, but along the way, we also encourage and sometimes even require the developer to use our construction company, to use our contractor, to use our licensed agents. So that way we can guarantee the results based on the performance of people that we know for a fact know what they're doing. So vendor management, all right, exiting, whether through a lender, through a refinance, or using a licensed agent to sell the property after they finish the fix and flip. The quality control is huge amongst that because now if people use our people that are network that we endorse, that we fully know and what to expect from the performance of the deal because they're using people that we're familiar with. And I'll share you guys an example. We had a gentleman who actually took our training about 2016, I believe, and he went ahead and did this stuff, used his own lender, used his own contractor, and we couldn't really control much and help him out other than the fact that he attended our training. After he left the training, he didn't really call us much, all right? But he used his cousin, that was the contractor. He used a friend for the lender, all right? The cousin didn't do a good job in the construction, all right? And he stopped mid-project, took the money, and then stopped the project because he didn't know how to finish it afterwards. Got to a certain point, and he just stopped. And there was no more money for the poor guy to finish the project or have someone qualified to finish the job. So he called us in a panic and said, you know what? We can try and rescue you, but there's no guarantees. And so we did just because of our relationship. And we sent our contractor, we sent our agent over there to be able to do what we need to. And he ended up later on breaking even on the deal. And he was very happy because he was in position to take a huge loss based on the people that he chose to be getting along the way. All right. So that's one example of how we mitigate risks by making sure that the right people are involved in the deal from the beginning and not the end to protect everyone's capital. Okay. All right, and then how we do it, all right, and between us and our market and our different borrowers and colleagues is that we market and identify opportunities, all right, inspect the property to establish value and the value add plan, complete the analysis, sign the contract, all right, undergo through negotiations and get the offer accepted by the buyer and seller, prepare closings, and that's where we put our package together to make sure we underwrite the deal to make sure the numbers work, and we mitigate the risks based on what's going on. And if everything fits the criteria, what we're looking for, then we'll approve that loan or approve that fund. And then the borrower is off to the races. All right. They go ahead and buy the deal, do their value add, and then perform their exit strategy. And once the exit strategy is done, where they either sell it or refinance it, then the principal gets repaid back to us. And as agreed, which we would pay back to you as a capital investor, plus the returns and the profit sharing accordingly. And then we do that over and over and over again. We repeat the process, same thing over and over again, but different deal, different property, different numbers. Okay. All right. And the great thing also is that we have an experienced team. We have our law firm of Christopher Markham. He's been with us for the last 13 years or so. Great gentleman. He's protected all of our capital investors to make sure that everything's correct with regards to protecting their funding and an appropriate deed of trust and promissory note tied to the property. We have an incredible title company, District Title, that makes sure that if there's any kind of acquisition, that the title is clean, it's marketable, it's insurable, and there's no issues selling the property to get the investors' money back. And then for those who are doing buy and hold, we have an incredible property management company that handles all the rentals. And then, of course, Fortune Homes Construction, which is our own construction company that we absorbed along the way. One of our contractors that we used to work with a long time, he actually ended up retiring from residential real estate. And what we did is we absorbed his team and his crew to keep on fighting the good fight in the construction business. Okay, so everyone in this group here knows exactly what they're doing, what they're supposed to do to make the deal succeed. Okay. And then, with that, we have an opportunity. Okay. So here's a deal that we purchased not too long ago. All right. And we have several investors in it in it already. All right. But now is the time where we're doing some big construction for the deal. All right. So here are the numbers here. Your purchase price was $475,000. Renovations 165. ARV, which is the after repair value, is roughly $900,000 to $925,000. Year built 1934. And the square feet, and it's 3-bedroom, 1 bath with existing off-street parking in the rear. Okay, here's some of the existing pictures of it as is when we purchased it. The kitchen looks, actually, what's funny? The kitchen looks good, but if you look deeper, it's horrible. It's built all wrong, installed all wrong, and everything was falling apart. So we had to take it all out and do it new again. It's very enclosed as well. It's not a very open concept. Okay, and then everything is just the wrong color, and then the wrong everything. Okay. And you take a look at the back here. All right, this is actually the driveway in the back alleyway, and you see a brick wall here. There used to be a garage, but the previous owner bricked it up, and so we're actually going to use that space to install a brand new window to add a new bathroom, and then add another add another bedroom down there with a window to make an egress window, and then we're going to add another bathroom upstairs as well to make a master suite. So the end of the day it will be 4-bedroom, actually 3.5 bath. Our value add plans: remodel kitchen A to Z. Open up the walls with a large island, replace the HVAC. All right, replace some windows. Some of the windows are good, some are bad, so we'll replace the ones that are bad. Finish the basement, install LVT flooring, install new drywall, standard landscaping, install recessed lights and so forth, and the whole 9 yards. And then in the exterior, we're going to do some landscaping, power wash the brick, paint the brick, install a brand new door that looks really nice from the front for curb appeal, and then repair the driveway in the back and patch it up again. Okay, so here's our drawings done by our architect and our engineer. All right. It was very closed off before, but you see here on the main level in the middle, we have a very large kitchen looking into the family room, brand new powder room. And then upstairs, we have a nice master suite with a master bathroom as well. 3 bedrooms upstairs and then 2 bathrooms upstairs. And in the basement, we have a new bathroom and a new bedroom as well. So a total is 4-bedroom and 3.5 bath, excuse me. And then this opportunity, before we bought it, we looked at the comps. And based on the renovation value of what everything is done here, we feel that it can sell for 900 plus very easily based on the comps here. You see here the ones that are higher in the $1 million to $900,000. These are the ones that are fully renovated or slightly bigger. Okay, whereas some of the ones that are lower, these were the ones where the houses were owned by a homeowner, or maybe they didn't install the right finishes, or had a awkward type desirability factor because they're on a busy street or whatnot. And then this one is lower because it's sold a while back, so it wasn't 2023. But yeah, we feel confident that's going to sell between $900,000 $925,000 based on these comps here, and the comps have only gotten better across the time since we purchased it. Okay. So the details are we're actually raising $100,000 for this in increments of $50,000, and the duration is 9 months or less. All right, we think it's actually gonna be 6 months. We'd like to say 9 months and under promise, over deliver. Deadline to commit for this deal is Thursday, end of the month, February 29th. And our milestones, we estimate the project will be done in about 3 to 4 months or so. So it'll be probably up for sale late spring, maybe June-ish timeframe. So the total hold time will be 6 to 9 months. But again, we think it's more closer to 6 months because once we put it on the market in late June, we can get a contract. And generally, it takes about 45 days to close the deal if the buyer is qualified and be able to close on time. Our offering is that we're just going to be a fixed APR depending on the size of the commitment. So you commit $100,000, it'll be a certain number. If you commit $100,000, it'll be a certain number. All right, profit sharing is estimated between 6 to 12% APR. In addition to the fixed APR, okay? So upon the sale of the property, then the principal and returns will be paid 2 days after settlement. Once it hits our bank account, then we'll initiate a payment back to you guys via cashier, via check or via wire, depending on how much it is. And then the investor will also, whoever invests in this deal, you'll also have access to the property via combo lock. So if you're ever in the neighborhood and want to take a look at what we're doing, you can always come by, take a look, see what's going on, so that way you can learn as well if you want to. You don't have to, but there's an option that we'd like to give to our investors as well. If you choose to, you can definitely come out there, okay? All right, and then we have another opportunity here in land development, all right? So this is called Woodford Hollow. This is located out in Knoxville, Virginia. Currently, it is a vacant wooded lot of 225 acres. It's currently zoned agricultural, and they're looking to develop the lots with 7 residential lots with the potential of 11 lots to subdivide it out by right. And then the rest of the area with all the trees where there is no while they're developing this, it's actually gonna be rented out by a trucker to use some of that land to store some of their materials for all their or have a parking space for all their 18-wheelers. Okay, so this investment is actually really unique. While the land is being developed and subdivided with the county and getting all the approval paperwork, this deal is actually going to cash flow along the way because of this trucker business. All right, so they've agreed, I believe, if the correct number, that they're going to pay about $50,000 per year in rent to use the land to park all their trucks. So that's instant cash flow while we're doing all the paperwork to get this deal subdivided and developed along the way with all the site prep and the infrastructure that's needed with the water, the sewage, the fire hydrants, the street lights, and so forth along the way to get this 7 lots in there, if not maybe even 11 lots as well. The total raise for this is $475,000. And the great thing about this is because there's already cash flow. This one in particular will actually have quarterly, monthly payments as well while you're investing in this deal. Okay, so so a very great deal. You want to take a look at it further. There's a lot more detail behind it. So if you're interested in this, you can definitely reach out to us and contact us, and we can give you more information about that. Okay, but do you need to raise all $475,000 yourself? And the answer is no. We can raise in $25,000 to $50,000 increments in this particular deal. But of course, the higher the number, the more returns you'll have because if we have one account, it's $475,000, it's less accounting and less administrative work compared to, let's say, 5 accounts of $50,000 each or $75,000 each that force us to manage multiple accounts. Okay, so the more the amount, then the higher the return. We basically get past the savings of our admin and accounting costs to you, so that way you have more return. Okay, so that's an opportunity there for land development and one for fix and flip in DC and one in Virginia. Okay, so the next step is that if you're interested in what you hear here on how to invest in real estate, the next step is very simple, is that you complete a no obligation worksheet that will be sent via PDF to you, or you can via email, or you can complete it online on this website here. Okay, in fact, in the chat tool, I'm going to go ahead and type in that that link right now, so that way you guys can use that to fill out the form. But it's no obligation. You basically let us know how much money you'd like to invest, how long it takes for you to get access to that money, and what kind of goals you have, so that way we can advertise or market the right deal that fits your appetite. Okay, all right, and then going on to the next thing here is that once the this worksheet is done, we'll kind of know what you're looking at, how ready you are. Then you can then complete an investor application. Okay, so when we do returns on investment, we do have to issue tax forms out. So we do require some personal information from you, so that way the appropriate tax forms are sent out to you when tax time comes. Okay, complete a promissory note. All right, every deal has its own promissory note that clearly identifies the fixed return and profit sharing, so that way you know exactly what you're getting along the way and the transparency behind that. Okay, and once the promissory note is signed and the date of deployment is approaches, you then deploy the capital, all right, into our company fund, and then we can go ahead and proceed from there with tracking the account and send you quarterly statements on how your returns are performing on a quarterly basis. Okay. All right, so you're interested in the deal in DC or in Knoxville, Virginia, please let us know. And then also ask yourself, do you know anyone right now who is looking to invest their capital in places in real estate that's other than the stock market? If so, please refer them to us. We are happy to help them out, get them the best returns possible, and go from there. All right. All right, so we do have a question here. All right, so let me pull up the chat menu here. All right, and the question is from Mr. David Cohen. How many opportunities are evaluated each year, and how many are approved or denied, and what is the historical range and average return? That's a great question. Okay, so fix and flip. All right, we generally do about 20 or 30 per year. There's a lot of them that we do because that's the most common investment vehicle, and the typical returns for fix and flip could be 12 to 15%. But it could go up as high as 18% or maybe 20, depending on how the deal performs. But I like to say 12 to 15 on average. Okay, and then for land development, that really depends on the actual deal. Land development and condo conversions usually take 2 years. And the one that I just showed earlier is actually very unique in that it's cash flowing. Usually land development doesn't cash flow. Okay, so you park the money and then you wait a while before the whole thing's done, before you get the money back plus the returns. And those vary as well. I couldn't really give you a range of that because every deal is different. I've seen things go one way or the other from high to low, so it's really hard to there. And then for multifamily, this one's a little bit easier because it's more concrete. There's a very systematic approach for multifamily because our investors only buy deals that already have tenants inside that are somewhat stabilized. All right, meaning that there's people who live there already and paying rents. So our investors, if they are looking at deals where it's completely vacant, we generally don't fund those deals because they're too high risk. All right. We only want to fund the ones that look like there's always stabilization. There's people who live there. There's a strong job market, and then we go ahead and proceed with the investment. And those returns have what we call preferred returns of 6 to 8%, which that's the actual payment out on the quarterly basis. And then the equity growth can increase the profits by another 10% or so, depending on what's going on. Okay, so in 3 years, 5 years, that could be the ratio. And then with regards to denied or approved, that's a great question. So because our developers most of them understand our underwriting criteria, they generally don't waste our time with things that they know we will deny. Okay, so there are some deals that we've denied, but more recently it's been rare for us to deny ND because our regular folks kind of know what we're expecting from our underwriting guidelines. Okay, so great question, David. Thank you very much for the question. Okay. All right.
Can I ask a question?
Yes, Sandy, go ahead.
What is the multi-unit you have? You didn't mention, do you have multi-unit deal that, looking for investor?
Yes. At the current time, we don't have a deal, but the deals we've had in the past are usually not in the Washington, D.C. metro area. They're in different places because multifamily deals are not very abundant here that can make good margins. So we generally look out in Richmond, Virginia, or in North Carolina, or in Texas, or in Georgia, places where there's a great emerging job market and there's steady growth there from a cash flow perspective. Okay, so some of them are 100 units, some are 200 units, some are 300 units. So we don't usually, for multifamily deals, we generally look at the higher amounts of units because the more units you have, the less risky it becomes. So if someone were to invest in, let's say, a 15-unit, multifamily, that tends to be pretty risky because you can't really have a full-time person managing the property. That's a part-time job, and most people don't want a part-time job. And then in addition to that, if you have 10% or let's say 20% vacancy, that's 3 units. I mean, 3 units out of 15 is a lot of money. You can go negative cash flow pretty quickly there. Okay, whereas if you have 100 units, And let's say you lose 10%, that's only 10 units out of 100. So you still have 90 units paying rent. So the risk exposed to you is less, which is why we like those, because we like to be in a certain margin when it comes to risk mitigation. Okay. All right. Thank you for the question, Sandy. All right. And then the
Thanks.
next step also, if you guys want to do everything online, you can use the link that I put here in the chat tool. But basically go to our website. There's a link there that says under our services. There's a link that says put your money to work. And you click on there. There's a form that fills out your name, your information, and then the questions that we ask. And once you submit it, then we'll know exactly what we're looking at. And then we'll reach out to you with different opportunities that we have in our pipeline, specifically the 2 that we have right now that we're raising funds for. Okay. All right, and then and that's pretty much our presentation. So let me go ahead and open up to you guys right now, see if there's any questions I can help you with based on what you've seen so far. And since we do have a small crowd, feel free to go ahead and open your mics and cameras, and we can go ahead and address your questions. Okay. Okay, I'm sorry, the link was not sent to everybody, so let me send that again. So here's the link in the chat tool. All right, sorry about that, Wanda. Thank you so much. So there's a link for everyone that you can click on where you can complete the form, and then we can proceed from there, okay? All right, are there any questions that I can help you guys with based on what's presented so far? Any feedback? Again, feel free to unmute your mics if you have a question, or type in the chat. Well, either I did a really good job in this presentation, or I was really boring, okay? But regardless, guys, I thank you so much for sticking in there. For those who attended tonight, please look out for an email from me with the form and the next steps if you're interested in proceeding from there. And then also for those who are interested in the DC property or the land development property, I can send you more information about that as well if you express interest there. There is a deadline for both, so there is some urgency there. So if you have any questions, again, please reach out to me. Let me type in my email address here in case you guys have any questions into the chat here. It's info@fortunehometeam.com, and I can answer your questions there as well. I'm sorry, did someone had a question?
I like to see more details about the land deal and the DC. The DC is short term. The land deal, I wasn't sure about, like you said, 2 years, but you say they have, you have income that, like rental from the truck company.
Yes.
I'd like to have some more information about that, like,
Okay.
some details.
Sounds great. We can definitely get that information over to you.
Okay, thank you.
You're welcome. All right, are there any more questions? No other questions? Tracy, thank you so much for making me feel better. Tracy reminded me that I was not boring and that she's leading towards learning more and becoming a versed here. So thank you very much, Tracy, for your kind words, okay? All right, guys. Well, thank you so much. I hope you guys have a great night. And once again, please look out for an email from me either tonight or tomorrow morning first thing for more information on how to move forward, okay? Thank you so much. Have a great night. Take care now.